Long before sunrise, commercial landscaping crews are already hitting the road. They are working harder than ever to cover growing routes. But the owners running these fleets are being squeezed from both sides. Looking at the recent fiscal data, 42% of landscaping businesses saw revenue declines last year. At the exact same time, over 80% were forced to raise wages just to keep reliable talent on the payroll. This creates a painful paradox. You can have a fully booked spring schedule, a calculator full of expected revenue, and a bank account that is practically empty. A hidden mathematical trap destroys dozens of businesses every season, often while they are at their busiest. To survive, you have to look past the fieldwork and master the timing of the money itself. We call it the spring trap. It is a severe timing mismatch between the cash leaving your business and the revenue finally returning. Look at this timeline of a typical landscaping season. In April and May, you get hit with massive, unavoidable startup costs. Fresh mulch, fertilizer, equipment maintenance, and scaling up payroll. The cash line plunges deep into the red. You complete the jobs and send out your commercial invoices in May, but commercial contracts routinely dictate 60 to 90-day payment terms. That means the actual cash does not hit your account until July, leaving a massive gap. While you wait for those client checks to clear, your weekly payroll and equipment loans still come due. You cannot ask your crews to wait 2 months to get paid. This cash gap is a structural reality of commercial contracting. It exists because of the way large accounts are billed, and it occurs independently of how well you manage your crews. To cross that 90-day gap safely, you need to deploy the right type of capital at the exact right time. First, consider business lines of credit. This is a revolving pool of funds, perfect for covering seasonal payroll spikes, because you only pay interest on the money you actually draw down. Second, working capital loans. These provide an immediate lump sum injection of cash. It is exactly what you need in early spring to buy materials and inventory in bulk before the season starts. Third, invoice factoring. Instead of waiting until July to get paid, this tool uses your unpaid commercial invoices as collateral, converting the work you completed in May into usable cash instantly. Crossing $20,000 in steady monthly revenue is a major milestone for your business. At this level, you qualify for premium low-cost rates that are simply unavailable to smaller operators. Grabbing an expensive cash advance out of panic will just compound your debt. Selecting a purpose-built financial tool creates a stable, manageable bridge over the cash gap. The commercial finance marketplace is dense and complicated. When you are managing crews at the height of the spring rush, you do not have the hours required to compare loan terms. That is the specific role of a dedicated, no-cost funding advisor. They take your financial data and translate your seasonal narrative, so strict underwriters understand exactly how your landscaping cycle works. Behind the scenes, these advisors use a specialized 3-filter match algorithmic system to evaluate your options. The algorithm instantly sorts through hundreds of lenders based on their appetite for the landscaping industry, your current credit profile, and the exact loan size you require. This entire process happens safely behind a digital wall. It evaluates your eligibility without triggering a hard credit pull, keeping your credit score completely intact. Passing this search process off to an algorithm means you keep your focus exactly where it needs to be, out in the field, scaling your operations. Most owners wait until they hit the cash crunch to look for money. That reactive scramble forces high-stress, expensive decisions. But top-tier operators take a completely different approach. They use the sun-shining strategy. Look at this cyclical performance graph. The optimal time to apply for capital is actually when your business is performing at its absolute peak, from May through September. Underwriters look heavily at your recent cash flow. If you apply during your strongest months, they see a highly profitable, low-risk operation, resulting in higher approval rates and lower interest. If you apply in the dead of winter, they see a liability. Taking action before the bank account empties completely shifts your position. You stop surviving the season and start actively directing your company's growth. By securing your funds long before panic sets in, you drastically reduce your total cost of capital. Think about approaching a Friday payroll without a knot in your stomach. The cash is ready, and your crews are paid. Your automated payments for the mowers and trucks clear smoothly, and your fleet stays on the road without a single interruption. You can establish that stability right now. Pre-qualify today at BusinessLoan.Directory to bridge your seasonal gap and fund your expansion. Taking control of your capital timeline today ensures you have the exact fuel you need to scale tomorrow.